Hello, everybody, and thank you for taking advantage of the Valuation Analyzer Program, part of the Ready, Aim, Win approach. Congratulations, you are here. So this is a quick little instructional video on how to use the Valuation Analyzer and how simplistic it is, just to alleviate some questions that a lot of members have had in the past. Thought it'd be easier to have this video you can refer to anytime you wish. When you load up the Valuation Analyzer Program, it is an Excel file. Reason why we had our team build this in Excel, and it's a very complicated program within it, but the complication is what creates the simplicity, remember, which is one of our three core pillars of the approach. And we tried this on a website years ago, and it would crash. The functionality was terrible. It was slow. Excel is fantastic at functionality, at reliability, and speed, and so we had this built within Excel, and that's why it's coming to you in that type of file. So when you do open the file, it's going to give you this little box here that's going to say, it contains macros, do you want to disable them? Make sure you click enable macros. That's essentially telling the program, yes, make all the formulas work. Okay, so you click enable macros, and here we are. The evaluation analyzer is made up of three worksheets. The core entries down here, property analysis worksheet, investment results. We will only be entering some minimal amount of information in the first two. The last sheet right here, you can't even touch. It's just the investment results based on our entries here. All right, let's get started on the first sheet, which is some core property information. The next sheet over here is projected financial snapshot, where we're going to actually enter a little bit of data about the property itself. Almost all of this data is gathered from two places. One, from the seller or listing agent, who will give you the current rent roll and current projected expenses. Okay, you're going to use those for now. When you get the property under contract, we'll do full due diligence on it after that to verify this stuff. The core entry information is based on just general information that you receive from the agent as well. These at the red asterisk here are required, okay? Anything in yellow on these two sheets is available to you for data entry, okay? In addition to that, the unit configurations right here, this area which we're going to enter 2-bedroom, 1-bath, 3-bedroom, 1-bath, the configuration of the units at the property you're looking at. That is not highlighted in yellow. However, you are able to enter in there. Everywhere else, you cannot even touch and mess up. So you don't need to worry about it. Okay, let's get started. So let's say the property name is called Monster Towers. Okay, we're just going to run through a quick little property here. Let's say it's at 555 Main Street. Not too exciting. Let's say it's in Los Angeles, California, and let's say the zip code is 90045. We don't need to enter all this data, just the red asterisk, but if we know it, it's good to enter so you have it for your investors, partners, or for yourself later on. Let's say it's on the market for 150 days. They're asking, let's say, $3 million for it. Let's say it's got 20 units. Built in 1990, let's say each unit's 1,000 square feet, so it's 20,000 square feet. Let's say it's on a 30,000 foot lot, and it's got 20 spaces, parking spaces. Let's say we want to offer 2.6. We want to see what it looks like and what the returns look like based on that. Let's say we're going to put down 50%, so our loan's going to be 50%, $1.3 million. Our interest rate's 5. Our lender told us based on a 30-year amortization, and our closing costs. Let's say title escrow, loan points, due diligence costs. Let's say we spend $25,000 to buy it. This is going to be, not 250. So $1.3 million and a quarter is going to be our total cash to close. These other are just some additional boxes here to if you know the information, who the current owner is, when they bought it, what they bought it for, maybe what their current loan balance is, just so you kind of know intent of the seller. And the other three are just notes for additional information. Okay, that's it. So we pop over to our property analysis sheet. All that stuff auto-populates here. It also automatically calculates our loan payments, our debt service here. Now, this sheet is based on two different situations. One is the current monthly and current annual. That's what you're going to get from the broker right here for the income and for the expense. Projected and market. The market rents are determined based on the resource playbook. You'll find relevant sources of information there to gather up what market rents are for these type of unit configurations in your market. Okay? This projected annual column in gray here is a snapshot on what the property looked like 3 years from now. I get this question a lot over the last 25 years. What do we look like a few years out? So it's a general kind of lookout on based on market rents and based on increasing expenses 3% a year, which you'll see how that calculates here. It auto calculates. What is the property going to look like 3 years from now? All right, so that's what a projected annual is. So you kind of have a snapshot. So let's get started here entering some of this information. You'll notice we have 15 units here. It's kind of like the default. If we had 10 units and we needed to get rid of units, there is a delete units in there. If we need to add units like we do, there's an add units button. Adding units, we need to add 5 actually, right? Because we have 15 and we said here on the core entries that it's a 20 unit building. So in order to add units, all you do is click add units and you put the number 5, okay? Because we have 15, 5 more is 20. Okay, auto calculates and auto adds that, okay? Let's say we only have a 10 unit apartment building. The way you delete is you specifically go into column A, this first column here, and you highlight the units you want to delete. So let's highlight 11 to 20 right there. You click delete, it'll say, do you want to delete? Yes, I do, okay? And it's gone. If you want to add, we need to add those 10 units back, add 10, okay, we got it again. That's how you do add and delete units, all right? Let's go down our unit configuration, and we get this again from the rent roll from the listing agent or seller. Let's say they're all 2-bedroom, 2 baths. In the essence of time of this video, to keep it short and sweet, we're going to enter all 2-bedroom, 2 baths. Let's say the rents are all $1,300 a month, which they likely are not, and you'll enter exactly what you're shown and provided. But I want to keep your time short and valuable. Let's say market we find from the resource playbook in the areas. We think a few years out it's going to be about $1,500 a unit. So we got some value to add here. And it auto calculates all of that. These other areas for other income are other tenant chargebacks, like for utilities, parking income, laundry, storage, other income. We're going to leave it blank for now, but feel free to enter those as they're relevant to your property. Enter the market vacancy factor, which again, you can use the resource playbook to find all the relevant resources for that. Let's say it's 5% in that market. That auto deducts. Now we get to the operating expenses. Taxes in Los Angeles, where I'm based, is based on a percentage of 1.25%. And that auto calculates based on our offer price of $2.6 million. And I'm just going to run down some expenses in general here. For insurance, let's say it's $5,000. For electricity, let's say it's $1,500. Water, sewer, $8,000. Gas, let's say $1,200. For the laundry room, let's say waste management is $2,500. Repair and maintenance is a few $1,000s. Pest control, $1,200 a year. Landscaping, let's say, is $2,500, plant some flowers and such. Got no janitor. You might have rent control in your area here. That's provided for. Management fee, let's say typical is 5%. We're going to underwrite 5. That's based on, already auto calculates based on your income here. Resident manager, payroll. The resource playbook talks about when it's usually required to have a resident manager. Like in Los Angeles, it's required for anything 16 units or more. In your area, might have similar legislation or rules on that. General administrative marketing costs. You can enter all that as it's relevant to your property. Here's reserve per unit. We also talk about that in the resource playbook. You could look into that, but for the sake of time, I'm just going to roll over that. Other expenses here as they're applicable. That's it. You're done. You've entered all the required information for the valuation analyzer to do its job. That's it. Amazing. So now we hook over to the, you look here, by the way, the end of results is that after debt service, at the loan payment based on the loan you're getting here that you entered on the core entry sheet, your pre-tax cash flow monthly is over $10,000. Annually, it's about $129,000. And 3 years from now, based on those market rents and increasing expenses, 3% a year, 3 years from now, it could be $167,000 in cash flow, just shy of it. Okay? We head over to the investment results. Again, nothing to enter here. This is the depiction of how you're doing. So Monster Towers here has a return on investments at purchase of $9.7 million. That's based on your cash flow right here annually over how much you put down on the property, which is 50%, which you entered on the core entry sheet. 3 years from now, they're estimating 12.5%. Your cap rate at purchase is 8.2. 3 years from now, almost 9.7, et cetera, et cetera. It talks about all of that. Additionally, what is the property worth a few years from now? Get that question all the time. What do you think it's worth, Jay? 3 years out. So how we did this is we said, okay, well, we kind of estimated, projected what 3 years out would look like, which is $251,000 of net operating income. All these terms again, net operating income, etc., all in the resource playbook. So $251,000. You head over the investment highlight sheet here, and the future value projected takes that number and gives you a menu of market cap rates. Depending on your area, let's say you find that market is a 5% cap rate, the property could be worth a little over $5 million. Paying 2.6 now, and 3 years out paying $5 million is a home run, grand slam. We just entered information. Those are hard to find a lot of times, but that's what this does for you too. That is it, guys. That is the balance. That is the core entries on the sheet. It took us very little time. We get this done in well less than 5 minutes. 3 minutes and 20 seconds has been the recorded time to beat so far in getting the analysis done. I'll leave you with this as well, and that is that this purchase proposed offer price column here allows you to do some sensitivity analysis. So let's say that the seller comes back to you and says, there's no way I'm taking $2.6 million. I want 3, and I'm hard on that number. So you enter 3 million here, okay, and enter 3 million, and we want to put a 50% down, so we'll increase the debt to $1.5 million. I keep missing a 0, sorry about that. And we could see what that does to our returns now. So now we head over here, our returns went down a little bit to 7.2 and to 9.7. So you can play around with pricing models here as you go forward, really simply and quickly with entering into one box. Hope that's helpful. If you run into any other snags or problems, send us a message to the support team at support@readyaimwinapproach.com. Support@readyaimwinapproach.com. Good luck and take care.